Dear traders, ladies and gentlemen, welcome. This is episode 14 of our MCA Trading Made Simple series. As you can see, we go step by step. We look at all the different components, the meaning behind those, and then also how this can be incorporated in your own trading so that you can still beat the algos of this modern age financial market where smart money algorithms are dominating foreign exchange markets as well as other markets. And as I've shown now, they really take into account all the different factors. However, as you can see with the market causality approach, we also take into account all the factors. So this is the best, most institutional grade proven edge you can have as a forex trader. It's far beyond any naked chart analysis or any price-based indicators. This is a different level. And I hope that you start to realize that the more you watch everything I show here. Okay, so today we look at one component of the market causality, which is also just additional information. Okay, it's not a dominant factor, but it's a very beautiful additional component. Namely, we talk about this histogram, which is called positions volume and positions volume history. So as always, we will first talk about the concept, and then we will talk about real life examples. To make a long story short, so just below the normal dumb money positions on the first and second histograms, you see this histogram, which also shows green bars and red bars, and the difference is here you see dumb money positions which are very over leveraged. Okay, now why is this important? Think about it. If you would have an account and all you would try to do is you would try to stay away from getting position hunted and stop hunted, and just now and then you would put in massive positions in the market, take a few pips and leave. That would be quite a reasonable trading strategy. Now, in order to make sure that this is not possible, believe it or not, the smart money algos are taking this explicitly into account, meaning that if there are over-leveraged positions, most of the time the smart money algos will at least do a pullback against these particular accumulations, you see? Because that way they make sure that people who are trying that overall will not make money. Otherwise it would be easy, isn't it? You could literally just stay there, observe, and then now and then place massive positions, take a few pips and close your trades. Overall, that does not work. So, as before, the green bars show the over-leveraged long positions, the red bars show the over-leveraged short positions. Okay. The first histogram shows the current, the second current plus historic, meaning if those positions get kicked out of the market, you still see them in the second histogram, so you can see what is still in the market and what is already kicked out. Okay, that's for example why this bar here is a bit longer than this one. And what happens? Surprise, surprise. Okay, we have over leveraged longies, so a pullback against those longies, taking them out. With over leveraged shorties, so a pullback against those shorties, taking them out. Okay. Now, as you can already see, in addition with all the other components, this is very powerful, especially if you see those over leveraged positions being aligned with the other dumb money positions in the market. Okay, so if you have longies already in the market and then you have also over leveraged longies coming in, those together give you a good likelihood that the algos will react to this by really going after that and pushing down the market. Okay, so not difficult to understand. Let's look at some real life examples as always. Here we go. Okay, so we are talking about those histograms here. Okay, these two. The first is the current, the second is current plus historical, the same like with the other dumb money positions. And what do we see? Over leveraged shorties, boom, pull back up. Yeah. And here over leveraged longies, pull back down. Now pay attention to this. If you have in particular like this aligned with the normal shorties, okay, then of course this is even stronger. Now if you have this aligned with a squeeze mode, which is not the case here, but let's say, yeah, like here, so we have some shorties and then with the squeeze against the shorties, of course this all adds up, yeah, on your checklist. So if you have already shorties trapped in the market and they are taken care of, and then you also have new over leveraged dumb money positions entering, of course there's a good reason for the algos to just take those guys out. So this is a long trade for you, okay? You understand? Wow, look at this precision with the pin to the MTS here in Aussie dollar, by the way. That's the precision of the causality. Okay, so it's an additional feature, but it's very, very nice. And as you can see, we thought about everything. We thought about how to visually and psychologically showing that in the best way on your charts. That once you studied everything, you will almost in an automated fashion do your analysis. You see, oh, green activity, long is coming in, you know, the market is going against them. It's beautifully designed. And all the components are so powerful. Now, so everything in addition allows you, of course, in the end to basically outsmart the algo, literally. It takes a bit of practice because you have to kind of get a bit used to each component and their interaction. But that's where the power is of the market causality, you see. The power is in the interaction of all these components, because then you, as a human discretionary trader with a human brain, you have an edge. You understand? I should really elaborate on that on the later videos, because your brain doesn't have a lot of difficulties giving the correct weight to each of those components. And an algo, by the way, can only do that with very, very complex calculations, you see. So that's where we allow the human brain to have an edge again with this analysis tool, you see, with the MK web. Because you have the objective information, so all you got to do is just to make the analysis live and then trade live. And with practice you will get there, you see. But it's literally as if you see everything from the perspective of the algos themselves. That's a fascinating part, yeah. Okay, let's get back to the topic. So as you can see, look here, we had the over leveraged shorties coming in and MTS above the price. Okay, so you see again two components coming nicely together. An order gap zone on the way and an MTS here plus the shorties. So this is very tradable, you see the power already coming from all of that, yeah. Okay, let's look at another example. Here the same, yeah. You see in the historical bar with the over leveraged over leveraged longies here, the green bar, okay. It's high on the scale, so pull back down. Over leveraged shorties, red bars, pull back. You see? Over leveraged longies here, look, pull back down. Over leveraged shorties, pull back up. Okay? So in conjunction with all the other data points, this is very, very powerful. Okay? Yeah, this example here as well. I wanted to show you that. Yeah, this is also a beautiful example here, dollar cut. So okay, so here what I said before, you have dumb money shorties plus dumb money over leverage shorties, MTS above the price, so nice move up, very tradable. Okay, again then look at that, dumb money shorties plus over leveraged, okay, pull back up. Look at this, dumb money longies plus a lot of dumb money over leveraged longies, pull back down. Okay. And this, by the way, is something you pay attention to. When the squeeze line starts to have a downward slope, this is always a great point, you know, to look for a trade. So you see, this is not very complicated to understand. Just look at this as additional information, especially in conjunction with dumb money positions, in conjunction with MTS, OSD, order gap zones, squeeze line, etc., etc. You know the deal, STS. We always look at everything in an integrative manner, which is really not that difficult. It may look overwhelming, but now that you see how everything works nicely together, and also now that you understand better each component, isn't it all quite intuitive? You know what I mean? It's quite intuitive, you see? Squeeze line goes up, move against the Damoni shorties. Okay, here's shorty activity coming in, moves up against them, then some shorties leave, new longies enter, pull back against them to the SDS. You see, everything makes complete sense when you think about it. Now, of course, there are moments where, you know, from our perspective at least, things are low bias, yeah, like here, where the bias is low, and of course that's the parts where we cannot play the game, okay, where we are not just placing random trades. These are the parts where the algos have the upper hand, even with the causalities, for example. But that's okay, we just need moments where we have an edge to make money, you see? You see the beauty of it all? Okay, so I don't think this is very difficult to understand. This is a very nice indicator. It's not a new one, and pay attention to it, especially when there are potential pullbacks. And yeah, I'm gonna work on the next video soon, and I think there's not that many left, maybe 5 or so. All the best.